Markets are soaring higher today. The Russell 2000 is up over 2%, the Nasdaq up over 1.6%, S&P up 1.2%, and the Dow, the lagger on the day, but still up 0.65%. What's going on and what is all of the news that you need to know for our markets today? Are stocks going to trend higher again after falling below the 100-day moving average and now breaking above it again today? We have all of the news and information you need to know in regards to our markets. Hit the like button as well as subscribe to the channel if you have not done so already. It's free 99. It costs you absolutely nothing at all. And sometimes you hear a baby scream in the background. What's not to like about that? Today's market rally is twofold. Number one, this morning, you did have PMI data that came out from S&P Global Composite, and it came in lower than expected. S&P Global Composite PMI flash came in at 50.9. The estimate was 52.2. You're getting pretty close to being contractionary on these PMI readings. S&P Global Manufacturing PMI came in at 49.9, slightly contractionary. The estimate was 52. S&P Global Services PMI came in at 50.9. The estimate was 51.8. And that's probably the reason why the markets did well off of this data today, because services has been such a sticky part or component of CPI that to see services PMIs falling suggests that maybe service inflation is not going to be sticky, and maybe the last 3 months of CPI readings we have seen that have came in hotter than expected are just a bump after all, as Fed Jerome Powell has suggested in the past that they were. You also had new home sales that came in slightly better than expected at 0.69 million for the month of March, and new home sales month over month that came in 8.8% higher than expected. So that was also good. Richmond Fed Manufacturing Index came in at -7, estimate was -8. Richmond Fed Manufacturing Shipments came in at -10, estimate was -11. And Richmond Fed Service Index came in at -13. The estimate was -5. So some really disinflationary data around services that we've seen today. And I will note that is why the Russell 2000 is outperforming the Nasdaq, S&P, and the Dow, up almost 2% today. You also had earnings today, one of which from UPS. This headliner on the Wall Street Journal says UPS revenue slumps as shipping slowdown persist. And again, with a company like UPS that is seen as kind of a bellwether for the economy, if UPS is slowing down, then it's hard to make the argument the economy is so strong that you don't need any rate cuts at all. There's definitely some sort of slowdown out there, and to the markets, that's seen as good news. Not too much of a slowdown, but a little bit of a slowdown is good, at least for Fed policy. You and I can make the argument that you'd rather see a very strong economy, the strongest economy possible, and less rate cuts, and maybe, higher for longer. That is probably better longer term for the markets, but some weakness here, the markets are taking as positive. We also had General Motors that had good things to say as well. They raised their 2024 guidance after a big first quarter earnings beat. GM said revenue during the first 3 months of this year was up 7.6% from roughly $40 billion a year earlier, and they did raise their guidance. The company now expects adjusted earnings of $12.5 billion to $14.5 billion, or $9 to $10 a share, up from a previous range of 14 to 13 billion. 12 to 14 billion. I don't know what I was reading there. 12 to 14 billion. So they raised the low end 500 million and they raised the high end by 500 million, or $8.50 to $9.50 per share. GM also raised expectations for adjusted automotive free cash flow to a range of 8.5 billion to 10.5 billion, up from an earlier forecast of 8 billion to 10 billion. So same there. They raised the low end 500 million and the high end 500 million. Now, a big part of this market sell-off that you've seen, you actually did fall about 8.5% from the all-time high down to the low of April 19th. A lot of it was predicated based on maybe earnings are going to miss. Maybe earnings are going to come in worse than expected. And even companies that are reporting misses like a UPS, they're not bad, at least so far. Today in After Hours, we will hear from Tesla, Visa, Enphase, Texas Instruments, Steel Dynamics, Chubb, Seagate, Baker Hughes, Weatherford, and Mattel. Tesla is deemed as a big tech stock by a lot of investors, but it doesn't tend to move alongside big tech. If you've seen what Tesla has done in 2024, it's been basically straight down. The stock's lost over 40% this year alone, and the rest of the markets have done just fine. So I'm not going to sit here and say Tesla's going to be that important to the markets, but it can have a small sympathy move with other big tech names. So keep that in mind. Visa will be a very important one. I will be listening to the earnings call here, or at least reading the transcript, because I want to know, how are consumers doing? Are they still spending a lot of money? Are they making, less purchases, less frequent purchases? Are they, spending less when they go to stores? Or are they spending more? I want to know, what's the deal with consumers? And Visa could tell us just that. Now, coming tomorrow, you will get Meta. Meta earnings will be more important for the broader markets, right? Meta moving up or down is going to have an impact on all of your big tech stocks out there. So Meta, depending how they move, can be very important for the broad markets. You do have IBM, Ford, Chipotle, ServiceNow, Lam Research, another big AI high flyer there. Vail and Align that will report tomorrow and After Hours. In pre-market, you have a couple notable names like Boeing, AT&T, General Dynamics, Boston Scientific, and Biogen, but nothing that's going to be systemically important to our markets. Thursday pre-market, you will get Royal Caribbean, American Airlines, Newmont, Altria, Caterpillar, Southwest, Bristol Myers, Squibb, Mobileye, and AstraZeneca. And then Thursday and After Hours, that's your biggest day for market cap weighting in the S&P and the NASDAQ. You have Microsoft, Google, Intel, Snap, Roku, Western Digital, Dexcom, T-Mobile, Gilead, and Aginco Eagle. And then Friday, it is healthcare and oil, ExxonMobil, Chevron, AbbVie, HCA Healthcare, and a couple others. Over here on StockTwits, the sentiment for the SPY, this is the most popular ETF that tracks the S&P 500, is bullish today at 64. Yesterday, it was bearish at 43, which doesn't surprise me all too much, but definitely you are starting to get some more bullish sentiment out there. Message volume today is at 48, which is normal. Kind of shows me people are not, showing a lot of interest in the S&P, which also makes a lot of sense right now. And the participation ratio is at 53, which is also in the normal range. The percent of stocks above their 50-day moving average today is jumping up about 8%. So 8% of stocks are breaking above their 50-day moving average today. You're now at 42.52% of stocks above their 50-day moving average. That's pretty impressive. Not even going to lie to you guys. That's pretty impressive. And a lot of that is, again, due to the outperformance today of small cap stocks. You're still sitting at pretty dang low levels compared to where we were prior. To be back at 34% where we are now, that would be going back to the beginning of November. So in terms of broad market strength, you're still sitting at kind of where you were before 2024 started and before the late 2023 rally started. So you're overall not that good as far as the average stock. It's just not doing that well. Hasn't done that well in 2024, but you are starting to recover a little bit. And if earnings season does show that, hey, maybe stocks are going to come in with good earnings, well, I would expect the outperformance in the small caps could continue, especially as we get into early May. If we get the CPI report that comes in better than expected for the month of April, that could be some really good news as well for your small caps. Tom Lee, someone we reference here on the channel quite often because he's remarkably correct. I mean, he was even correct to say on April 19th, this was likely the bottom. He actually said over the next 2 days was likely the bottom. And while the last 2 days, the NASDAQ has rallied over 1% each day, with today being a 1.5% gain. But neither here or there, he's bullish on stocks. He thinks inflation's going to prove to be just a bump in 2024. And he thinks small caps can rally 50%. And judging off of the last couple of days, I would say there's probably a larger rally coming for that sector. even if big tech stocks underperform on their earnings, if earnings don't come in as good as expected, it is possible, as we seen last Friday, big tech could sell off and money could go into other areas of the markets, like small caps. Based on the data that came out today, your service and manufacturing PMIs, you are seeing the odds of a cut for July rising quite a bit. Yesterday, the odds of a cut in July were 35.6%. Today, they're 41.1%. So jumping over 6% today, that is great. You're still pricing in the first cut for September 18th at 46.6%. The odds of a continued pause, so no cut by September, is 27.3%, and the odds of 2 cuts by September is almost 23%. Now, November, you're still only pricing in 1 cut, and then December, you're pricing in another cut. The odds of 2 cuts by December is 35.2%. The odds of only 1 cut this year is 31.2%. And the odds of no cuts this year is 10.4%. And I think if you look at this as a factor of what's priced in to markets, you definitely have a pretty bearish outlook for Fed policy priced in. The markets are now, for the first time in a while, first time in 2024 at least, pricing in less cuts than what the Fed said they were going to do. The Fed just last meeting still forecasted 3 cuts. The markets are pricing in barely 2 cuts. I think that does give room for maybe inflation to come in a little bit weaker and the markets to price in more cuts, which again could be good for small caps, for mid caps, really your average stocks. I don't think small caps are good for the S&P and the Nasdaq on a headline basis because they're not good for big tech. Doesn't matter, rate cuts or not. Just like the reason why big tech has been outperforming, it's because it doesn't matter what the Fed does. Earnings are expected to come in the same regardless of what the Fed does. But if we start to price in more cuts with a strong economy, because inflation does fall over the next 3 to 6 months, I think that could be especially good for small caps. And I think you're in a good position now where, hey, if it does get worse from here, you're almost only pricing in 1 cut anyways. Maybe you get no cuts. Big deal. You've already went from pricing in 6 down to 5, down to 4, down to 3, down to 2. At one point, you were only pricing in 1. The problem would be if the next couple of months of inflation come in hot, the Fed starts talking about raising rates again, then that would be bad for just all of the markets. But we're not quite there yet. Keep in mind, with today's earnings, Tesla is expected to move 10% plus or minus. So that could cause a sympathy reaction in the markets. Not expecting it'll be a large one, but a big move from Tesla could definitely affect some things. Now, Meta is pricing in about 9% coming tomorrow. Lam Research sitting at 8%. Both of those expecting to move big time. Google is at 6% and Microsoft is sitting at about 5%. So you are expecting some big moves from your big tech stocks, and thus I would expect a big move over the next coming days in your broader markets. And coming tomorrow, you will get durable goods orders month over month. You're expecting this number to come in at positive 2.2%. Last month was positive 1%. So if you're thinking on a month over month basis, if last month was 1.3% positive and you're expecting another 2.2% positive, that's a pretty strong economy. That's a strong durable goods orders number. Now, to see a really weak number would probably be bad news for the markets, but to see a number coming in less than expected would probably be positive. So that is something you definitely want to be watching for, coming out at 8:30 in the morning tomorrow. A bunch of oil data that will be coming out, but beyond that, there's not really much. You do have a 5-year bond auction. Last time we had one of those, yields came in at 4.235%. Yields are probably going to come in higher on this one. I'm not sure what the estimates are right now. We don't have them, but I imagine it's going to be like 4.7% or so. If it comes in higher than expected, those bond auctions do give the markets a reaction also. Now, as far as what is coming next for the NASDAQ, again, it's really going to depend what happens with earnings. I don't think it's a fair assumption to say just because today is another strong day that you're in the free and clear. You are breaking above that 100-day moving average, but I think you need another day or two closing above this really to get through this week to solidify, hey, you're probably going to hold the 100-day moving average from here. Even if we don't see a lot of explosive upside from these levels, you're probably going to at least trade sideways for a period of time. So I don't think anything is certain until tomorrow with Meta, Amazon, Google, Apple, all of those stocks, Nvidia, your big tech stocks. Until those guys report, don't make any assumptions about our markets. Now, do I want to be long? Do I want to be short here? No, because I don't know. There's not enough evidence to suggest big tech's going to have terrible earnings or bad guidance or vice versa. Great earnings and great guidance. There's just not a lot to kind of skew you in one direction or another. So thus, my confidence is not high enough to sit here and say either way, I want to be leveraged to the upside or to the downside. Simply though, it's not over with. And expect the unexpected. But I will say we bounced off that 30 level on the RSI. I was expecting that. The RSI is now back to 42.13. That does give you more room to fall to a new lower level than where you even were on this low of April 19th. It does give you some more room to fall here, so keep that in mind. If we do even trade sideways for the next couple of days, that could reset the RSI and cause it to go even further to the upside, get back to a more normal level, and thus give you that opportunity to see some more downside. So let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish? What is your take on this situation? Down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.